Hello, good afternoon and welcome. I'm James Gobler. I'm the MDU Senior Learning and Development Officer, and I'm going to be facilitating today's webinar run by Armstrong Miller's Morag Miller and Ben Walsh. So you might have received a Remediable Pension Savings Statement, that's the RPSS. That is sent to NHS Pension Scheme members who are affected by the McCloud remedy. Morag and Ben are here today to help you interpret that statement and understand what action, if any, you need to take. Just to give you a little bit of a sense of purpose, this webinar is for doctors working in England and Wales. It's for general practitioners, hospital doctors, training grade doctors, and NHS consultants or consultants doing a mix of NHS and private work. It's being recorded, so if you get pulled away in the session, that's fine. It will be uploaded to the MD YouTube channel and webinars page on our website, and all the attendees will get a centre link to the recording, so you will be able to access it if there's a bit you miss. Just before I hand over to Morag and Ben, just want to point out a few things in the navigation panel at the bottom of the screen for you. We encourage you to ask questions, and periodically we'll stop and take questions. Please submit these in the Q&A. We might not get through everybody's questions. We've got quite a big attendee group today, but we'll get through as many as we can. You'll also see there's a really short survey, a short feedback form or survey at the end. If you complete that by the end of the webinar, we'll send you an attendance certificate. And the attendance certificate will be emailed to you up to 5 days after the live event. Finally, before I stop and hand over, you may be aware MDU members get exclusive rates on Armstrong Watson's tax, accountancy and business advisory services, and you can book a free 20-minute consultation. So we'll give you a little bit more information on that at the end of the webinar, along with details of some of the MDU's learning resources. But for now, hi Ben and Morag.
Thank you very much, James. Right, so today we're going to be talking about the public sector pension reform and what you do with the brown envelope. Should you have well, I would say in some cases misfortune, but not if there's money coming back to you, which we'll explain as we go through the seminar. So just to give you a little bit of background about ourselves, Armstrong, sorry, can you move the slide? Sorry. All right. Oh, sorry. So the aim of the seminar, we will be looking at the public sector pension reform. Just a quick recap about what the public sector pension reform is, the remedy is, and how it may impact you. We'll then look at the Remediable Pension Savings Statement. That's what you're going to get in the brown envelope, should you get one through the door. We'll look at the online tool that HMRC has designed with a very catchy name of the Pension Adjustment Calculator. We'll also look at the NHS Remedy Cost Claimback Scheme, which is a mechanism of recovering direct costs that are not included automatically when you've undertaken the calculator. And then also we'll look at a timetable to complete. It is quite tight for many. And then also just a quick overview of any next steps that may be required. And I'll put questions at the end, but we'll happily take questions throughout because of the discrete nature of the subjects that we'll be touching upon as we go through the seminar. So as James said, if you do have any questions, just please feel free to raise them as we go. So a little bit about ourselves. So Armstrong Watson LLP, a firm of accounts, taxation and business advisors. We've been providing services to clients for over, well, nearly 160 years, in all fairness. I'm the partner in charge of the medical services team. We are members of ISMA, which is the Association of Independent Specialist Medical Accountants. Again, a catchy title that runs off the tongue. We're also members, we're affiliated with Medics Money. We are strategic partners with the MDU and also members of UK 200 Group. Again, just demonstrating our breadth of experience within the healthcare sector. We also have Armstrong Watson Financial Planning Limited. Ben is a member of that entity, a sister organisation. The reason it's separate is just because of the regulatory requirements around independent financial advisors. Again, Ben has a fantastic knowledge and experience of working with clients with NHS Pension, and we're able to give independent advice with that regard. And obviously, we'll explain a bit more as we go through. So, as I've already mentioned, my name is Maura Aguilar. I am a partner with Armstrong Watson. I do head up the Leeds Business Services team, as well as the healthcare services team across the whole of the business. I am a chartered accountant, and I'm also a member of the Institute of Governance as well. And I've been doing this job for far too long. So I'll now pass on to Ben, and he can explain about his background and where he's at.
Brilliant, thank you, Maura. Yes, so I'm a financial planning consultant, and like Maura said, I sit and work in the sister company, Armstrong Watson Financial Planning Limited, and then so we're directly authorised by the FCA, and hence why I can give independent advice. I work very closely with Maura and her team, with the healthcare services team, and through the years that I've been doing this, I work very closely with many NHS and private medical doctors, and that's allowed me to understand the sort of complex financial planning issues you have, the language that you speak, but also a lot of time spent trying to understand and navigate the NHS pension scheme. So before we get into it, just a quick introduction. So importantly, with this presentations on the NHS pension scheme, it's for information purposes only, and by no means it can be constituted as advice. Importantly, NHS pensions, no one size fits all. So we're just going to be talking about information only. Please don't react to this and make any, decisions without speaking to someone that can provide you with that specific advice. We are authorised by the FCA. The Armstrong Watson LLP authorised by the Institute of Chartered Accountants. So we're two separate entities, but we can provide advice. But this is by no means at all can be seen as advice. So let's get into it here. So a quick introduction to the pension schemes, really, before we start talking about the reform and the remedy. We're going to touch on, which I'm sure lots of you know, the different schemes. So we've got the legacy scheme, which is the 95 and 08, and then we've got the new scheme, which is the 2015 scheme. So they all the schemes have different sections, and therefore they have their own rules. Many of you here on the call will be members of more than one section. So you'll be either a member of the 95 and the 15, or the 08 and the 15. So that adds that layer of complexity. Throughout the presentation, we might refer to active members or deferred members. What this means, an active member is someone who's contributed to the scheme in this fiscal year, whereas a deferred member is someone that's no longer contributing, but they're yet to take their pension. So I'm just going to explain briefly the key differences between the schemes. So with the legacy scheme, there was a complexity in a sense that NHS staff, such as consultants and then medical practitioners, GPs, their pensions were different. They were calculated differently, so therefore they had different rules. I won't get into the detail today of exactly how they're calculated, but that's the key difference. 95 and 08 for consultants and NHS staff, now that's based on your final salary, whereas medical practitioners is earnings accrual. So we can see here on the table the way in which the pensions accrued each year is differently. Now, the important thing for people and who are in the scheme and looking to make retirement decisions is that lump sum. Everyone talks about the lump sum. So what are the key differences? Well, in the 95 scheme, there's a standard lump sum, which is 3 times that of your standard pension at retirement. However, in the 08 scheme, there is no standard lump sum. But what you can do is you can exchange the pension you've accrued for a lump sum up to 25% of the capital value of that pot. And that's what you can also do with a 95. You can top up that lump sum to make sure you take the maximum, which is up to 25% of the capital value, with the pension you've accrued. The other key difference between the legacy schemes, the 08 and 95, is the retirement age. So the retirement age for the 95 scheme is 60, whereas in the 2008 scheme is 65. Now that's the key reason why we can see that the accrual rates for the 95 and the 08 scheme are slightly different, with the 08 scheme accruing slightly more quickly. Now, looking forward, and then what is the new scheme, the 2015 scheme, this impacts all NHS workers. We no longer have the complexity of medical practitioners and NHS. The way in which this scheme works, it's a career average scheme. So each year you will accrue 1/54th of your pensionable pay, and then that will be revalued to ensure it doesn't lose out against inflation over the long term. Unfortunately, with this scheme, there's no standard lump sum, but you are still able to exchange pension for lump sum at the point of retirement, and that's again up to that 25% capital value. There's also been a change to the normal pension age. As things stand, it's been linked to state pension, so it's now 67. So that's the key difference between the different schemes there. Now, the public sector pension reform, and the McCloud remedy, as most people refer to it. What is the McCloud remedy? So the McCloud remedy was the result of a High Court upholding a decision that the original introduction of the 2015 new scheme, that scheme we just touched on there, the introduction was age discriminatory. Now, what happened when they first introduced it? Depending on your age, you would move into the scheme at a different point, and therefore that was seen as age discriminatory, and that was upheld in the High Court. Now, the McCloud remedy sets out to correct this. So that's the key thing here with the McCloud remedy. It's correcting that decision that was made in the High Court. So there's two key parts. Firstly, Part 1 relates to the members who joined the scheme before 2012 and have been moved into the 2015 scheme before 2022. Now, what happened here is there's been a rollback of that membership. So that's why we're all here today, because the rollback of membership has resulted in people having their annual allowance inputs changed. So that's what the Remediable Pension Savings Statement is reporting. So that rollback period is what Part 1 is. Everyone, no matter what decisions you make at the point of retirement, this applies to all people that were members of the scheme between 12 and 2022. Now, Part 2 affects people when they're looking at retiring. So the option that you have at retirement is, would you like to take your benefits in the legacy scheme or the new scheme? Now, you'll be given this at the point of retirement, the choice of what you'd like to do. Importantly here, each person has a different retirement objective, a different retirement plan, a different job plan. So making that decision is very much dependent on your personal circumstances. You don't need to make any decision now. You make that at the point that you retire. What I would say is, if you are in the process of looking at retiring, then it's important that before you sign on the dotted line, speak to the appropriate people to make sure that decision is the right one for you. Right. Moving on soon.
Right, so where are we now? Well, the NHS Pension Scheme, I'm sure it'll come as no surprise to anybody who's a member, is the largest public sector pension scheme. And as a consequence of that, that is slightly lagging behind some of the other public sector pension reforms that are ongoing. And we didn't really get much of an update on what the process was going to be till probably about 12, 15 months ago. At the time, it was probably about the end of March when legislation was passed. It stated in there that everybody that was going to be impacted and who would require a remedial pension savings statement would have that by the 6th of October 2024. But as I'm sure many of you will be aware, that has not happened in reality. And in all fairness, I don't think they were even starting to publish them until the week after that date. And there's still a significant cohort of people who have not got them. And there are also a significant cohort of people who received them. They've got errors in them. And after much debate with NHS pensions, they have now acknowledged that there's errors in them, and they are going to reissue them. So if you have got something, and I'll explain what the errors are in a moment, because they're quite easy to spot in the main. But yeah, it's by no means gone quite as smoothly as is planned, and it's taking an awful lot longer than they anticipated. Now, the first deadline is actually, and we'll discuss what the deadline is and for what part of the work that we need to do, is actually the end of this month, the 31st of January. Now, bearing in mind that a significant number of members have actually not got their statement yet, this is completely unrealistic. And the fact that it's taken NHS pensions absolutely months, if not years, to actually generate the statements. Quite rightly, the GMC, ISMA, the BMA, they've all been lobbying HMRC to actually seek an extension to this deadline. I don't think it's going to be successful in the first instance, but those that are going to be getting issued a revised statement will have 3 months from the date of that revised statement to submit whatever's required. But again, we'll touch on that a bit later on. The HMRC pension adjustment calculator, which we will go into in some detail in a moment, that is live. Again, there was significant teething problems when that first came out. It came out probably before the NHS pension statements were issued, but obviously for other pensions to use, because this is a HMRC calculator for all public sector members to use. And it had errors in it, basically. It didn't work. So they withdrew it for months until they corrected it. And I think it was relaunched in September. So again, maybe a month before we started seeing the remedial pension statements coming out for the NHS. But that now is live. There is a triage section, which consists of 10 questions, followed by a more detailed element. Again, we'll go into that in a little detail shortly. See, I think I've covered everything on that slide now because I've jumped around a bit. So then moving on to the remedial pension savings statement, we've actually got a quick poll now. What we would like to ask is how many of those on the call have actually received their brown envelope through the post? So if you could just answer yes or no, it'll just give us that. And please don't worry if you haven't got them, because there are an awful lot of them that haven't been issued yet. But if you could give us an indication, that'd be great. Thank you. I think you've got 30 seconds to do that. Oh, wow. OK. Gosh, well, that says it all, doesn't it? 2/3 of you haven't yet received your statement, with only 35.1% having received them. As I say, don't worry about that. I'm not sure why we're getting thumbs up and thumbs down, but that's very interesting. Probably says a lot about NHS pensions, I think. Right, okay, well, let's have a look at what is in the brown envelope when you get it. So the NHS pension is administered by the NHS Business Services Authority. Okay, so that is whom the letter will be sent from. This is one of our client's letter, which I've redacted their personal details, but it is a standard template that is used for all of the remedial pension saving statements. Now, again, just to avoid confusion, these are referred to as the remedial pension statements and the remediable pension statements. It's all the same thing. And the details within it, and even in the letter, I think it refers to both. But basically, it starts with a 2-page covering letter, giving you a bit of a background as to what the annual allowance is, why NHS Business Services Authority are sending you the statement. It tells you what's included in the statement, and then also touches upon the 22-23 pension input, which until now they've not been issuing unless you weren't impacted by the McCloud remedy. And then also the 23-24 will be sent separately after this exercise altogether. So that's basically the covering letter. We then go on to the first table. So the first table basically sets out the rollback period is the period from the 1st of April 2015 through to the 31st of March 22. That is the actual period that's under scrutiny here. And so what we're looking at is the dates of the first two columns. The third column is then the standard annual allowance, but don't be misguided by the standard annual allowance, because if you are a high earning, you may have something called tapered annual allowance, in which case you'll have less annual allowance than is showing in that column. We've then got the new pension input amount. So this is the amount of pension input following the rollback of your contributions into the legacy scheme. We've then got the old pension input amount. So this is the amount that you'll have had reported in the letters that the annual allowance pension savings statements. So those letters that you've received every year from the NHS BSA since April 15. And then we've got the final two columns gives us the information if you've elected for any scheme pays over the period under scrutiny. Now, what I have included is an example of where there are errors. So on the next slide, this particular example does not have any errors in it. But what we have seen is the old pensioner input amount for the 9508 scheme Unfortunately, what's happened on many of our clients and many members is that has been incorrectly updated to show the new pension input for 9508. So as you can imagine, the 9508 input and the new input has gone up significantly because all the contributions are now in that scheme, and there's nothing in the 2015 scheme over the years of the remedy. And so where the error is, they've copied across that new pension input into the old pension input, which means it looks like you've got phenomenal growth across the 2015 and the 9508 schemes in your old statements. Now, if you do have a statement that comes through the post and you can see that the figures are duplicated in those two columns, then please do let NHS Pensions know, or NHS BSA. Contact them on the number that's on the top of the cover letter, let them know, and they will issue a revised letter. They know this is an error that's happened, and they've acknowledged it, and they are now addressing it. I mean, it took quite a while for them to acknowledge it was their error, but they have now done that. So hopefully you will get a revised statement within the not too distant future. So the main information is actually detailed in that larger table. And then for information, they've then provided some summary information. We've got the carry forward position, which was the pre-McCloud remedy growth figures, because again, we need that information to determine if you have any unused annual allowance that can be carried forward into 15-16, which is the first year of the remedy. And obviously, because you can carry it forward 3 years, it will impact 15-16, 16-17, and 17-18. And then they've given us the summary of, with the new figures, what your 95 pension growth looks like, and then what your 2015 pension fund growth looks like. And then the final page just shows you the combined picture, putting your 95 and your 08 scheme together. So that is what makes up that brown envelope. So we need all that information, and one thing I will say is you need that information really before you can progress anything. I know people are chomping at the bit and know they're going to be impacted, and you want to engage an advisor maybe to help, but no costs will be covered by the cost claim back scheme, which we'll touch on later, until you have this statement. So just sit tight until you get it. NHS BSA has told us that anybody impacted will automatically receive it. So you don't have to chase it. It will come to you.
Right.
Perfect. So we'll move on now. I'm going to run you through some information around the HMRC pension adjustment calculator. But before we do that, we're just going to run another quick poll. Now, we just want to get an idea of how many people have suffered annual allowance excess tax charges since 2015. Now, if you haven't, or you don't understand this, then just click no. But if you recall ever having any issues with annual allowance tax charges, yeah, if you could just quickly pop that down on the poll. And again, it's around 30 seconds to answer. Okay, so there's a lot of people on the call here that have had annual allowance excess tax charges, nearly 44%. So if we think about the number of people on the call, 840, that's a lot of people who are impacted and will need to make sure that their data is reported and they use this calculator correctly. The other people that potentially, 56% of you might not need to do the full process, but I'm going to touch on that now and what that looks like. So the catchy name, what is the HMRC adjustment calculator? Now, what this calculator does, it was introduced by HMRC to update all people impacted by the McCloud remedy and make sure that those members could determine any new, reduced or additional lifetime or annual allowance tax charges. Now, the purpose of today is to talk about the annual allowance tax charge perspective. Further down the line, the lifetime allowance will become into play, but people impacted in that way are still yet to receive their statements, and I imagine that will be much further down the line. But importantly, this helps you calculate your public service pension adjustment and make sure that your position is corrected. So what does this look like? Step one is the initial question and triage process. So everybody who receives the RPSS statement, the brown envelope, needs to complete the triage process. The reason being is this will help determine whether you need to go through and do the full process. Now, the full process, which I'll touch on later, is quite extensive and complicated, so it's important for you to understand a couple of the questions that come up to see whether you might need to do so. They're on the screen here. So there's questions such as, have you paid any tax charges? Have you received your RPSS statement? Because if you haven't received it, you can't do the process yet. Have you paid an annual allowance tax charge? What is your net income? So if you're a high earner, is it above £100,000 in certain years because you therefore might be tapered? Have your combined pension inputs increased following the McCloud? So before, if you had an input for the 2 years that added up to 30,000, but now the combined of just the 95, for example, is 50, then we know there's an increase there. So all these are the questions you get to establish whether you might need to complete the full process. Now, the likelihood is if you've not paid annual allowance tax charges to date, if your income is below that of £100,000 up to 2021, and then below that of £200,000 up to the most recent years, and you haven't had large input increases on the pension savings statement, the likelihood is that you will not need to complete the full process. And that will tell you, what will happen is once you answer the questions, you will see this pop up, and it will say that you are not impacted by the remedy period, so therefore you're not eligible to use the full service based on the answers that you have provided. So you can see here clearly that 44% of people will need to do the full service because they have paid annual allowance tax charges. So that's a really important one. If you've paid any annual allowance tax charge, you will need to go through and do the full service. Again, it highlights the tapered element. So your annual allowance has not been tapered because you do not have high enough taxable income. So these are key things that we can establish, that if you are a lower earner without the annual allowance tax charges, the likelihood is that you don't need to do the full service. Now, if you go through and do this through your government gateway, it will save this automatically for you, but you don't need to do that. You can go through without logging in. What I would say is if you do go through without logging in, I would take a screenshot of this or print a PDF and just record the fact you have completed the triage and it said to you you weren't impacted and you didn't need to do the full service. Right, moving on. So what is the full service? What does the calculator require of you? Now, if you do the initial questions in the triage and it says, right, you need to do the full service, which it would do for 44% of people on the call today, you would have to complete all of the different sections that we can see on the screen here. So there's a general annual allowance questions, and then there's detailed annual allowance questions for all the years from 2016 up to 2023. So there's a lot of data here. Now, the data and the questions are listed here. So for each tax year, you need to have an understanding of the revised pension input amount. Well, Morag went through that, and that's on the statement that you have there. You need to understand if you've had an annual allowance tax charge that year, who paid the charge and how much was it? So did you scheme pays it, or did you add it to your tax return, or did you voluntary scheme pays it from an alternative pension? You also need clear information about your taxable income, any relief at source pension contributions, any claims for tax relief, and then this helps you establish your adjusted and threshold income to do the tapered annual allowance tax calculation. We also throw into the mix things such as gift day contributions. So we can see here it's very complicated, and there's a lot of stuff that you need to establish. Now, the way in which this was originally launched and what HMRC and NHS Pensions wanted was for members to log in and just be able to complete this themselves without any interaction with accountants or people like myself who understand the NHS Pension Scheme and understand, importantly, well, what is adjusted income? What is taxable income? So that's why we offer a service, and like lots of other companies, to help you deal with this and help you ensure that the information you populate and put into this is correct. It's very important because this could have a material impact on tax that you have to pay or that you're due back. Now, some people that will scheme pays this, that means that you could be paying for this for the rest of your life. So if you have had annual allowance tax charges and you are looking to make sure that your position is corrected, unless you have a clear understanding of all the different input data questions that we can see on the screen, we would recommend that sitting down with accountants or someone like myself who offer this service to make sure the position is corrected. Morag touched on it earlier, but I'm just going to run through sort of the timetable to submit the required information to HMRC. Now, for new tax charges, the original deadline is the 31st of January, 2025, which is what Morag touched on. BMA is heading the fight there, and they've been lobbying to try and get this extended. Or it is 3 months from the point that you receive your revised pension savings statement. So say you received one and it was incorrect, it's 3 months from the new one. Or if you haven't yet received one and it doesn't arrive before that deadline, don't worry, you have 3 months from the date that you get it through the post to act. Now, as we can see here, that's for active and deferred members. If you are a pensioner and you've taken your pension already, then the deadline is the 31st of January 2027. So they've pushed that deadline out because they know that they're struggling to hit the deadlines that they gave themselves, and they haven't provided the statements just yet. So that's the deadline for new tax charges. If you have a new tax liability following the new statement being provided.
What I would say is, obviously, we are talking about the remedial period. The 23-24 statements are highly unlikely to come out until after this is all being dealt with. So ordinarily, you would have received it probably started receiving the back end of last summer. Please don't expect it for probably another 6 months, if not longer. And that's for 23-24, which is obviously outside the scope really of this seminar, but just for information purposes.
Thank you. Now, if you've got overpaid tax charges and you haven't got any new tax charges to pay, the deadline is substantially longer. So that's good news. So if you're an active or deferred member, then the deadline for claiming back or getting compensation back for overpaid tax is the 31st of Jan 2029. And then if you're a pension member, even further away, 31st of Jan 2031. So this gives members lots of time following them receiving their statements to make sure if they have overpaid tax, that they get the tax back and it doesn't impact them there. So what I would say is, obviously the deadline for 31st of Jan 2025 is fast approaching. We're a couple of weeks away from it now. If you have had an annual allowance tax charge and you did receive your statement and it looks to be correct, don't just bury your head in the sand. Make sure you act now and get that sorted appropriately. Right, passing over to you, Morag.
Right, the NHS Remedy Cost Claim Back Scheme. Another title that just trips off the tongue. So basically, the NHS pensions, and more importantly, the government have actually recognised that this is a very complex process. And as Ben alluded to earlier on, that the initial intention was that members would receive the remedial pension savings statement. They'd be able to go to the computer, launch the pension adjustment calculator, and then populate the information that had been received in the remedial statement. And behind the scenes, they'd work the magic and it'll tell you what your revised annual allowance tax charges are, if any, across the 7-year period up to 31st of March 22, and including 22-23, because the information for that year is also on the statement. The reality is far from that. It's a massively complex process. And I guess, unlike a lot of other public sector schemes, the NHS has actually recognised this. And so the Department, or the Secretary of State and Health and Social Security has actually set up the scheme. They are the owners of the scheme, and they've devolved the management of the scheme to the NHS Business Services Authority to actually help members who have direct costs associated with the remedy to claim back up to a set limit costs that they may have incurred. Now, there are various guidance notes, and the link is on the slides. You will get the slides eventually, but so there is this one here, the NHS pensions NHS cost claim back scheme fact sheet, gives a very good overview. And there are other bits and pieces as well that will help advise you around how to go about claiming this and when you are not eligible. What I would say is you're not eligible to claim anything back until you've actually received your Remediable Pension Savings Statement and you've completed the calculator, or at least the initial triage phase. You have to be affected by the remedy to be in order to use this as well. And obviously, you'll have if you've had to pay professional services due to the complexity, and it's not around if you've got information or if you've used an advisor who has sourced information that you personally can source from NHS BSA, then that's not a good enough reason either. It has to be around the complexities of the calculations involved that leads to costs being incurred. So the next slide talks about so you cannot basically when you cannot use the scheme, and they're quite clear that they will not refund any costs without the statement. Actually, I should also refer to the remedial service statement, which is the statement that you would get if you've already retired or if you're acting in capacity of a deceased member of the scheme as well. They will get the remedial service statement. And again, you can use the cost claim back scheme for direct costs. Now, the direct costs are really around if you have incurred a tax charge or a direct cost due to impact taxes and out of scope years. So the in scope years are from the 1st of April 15 to the 31st of March 22. Anything outside of that is called, it's out of scope. But what may happen is you may have revised annual allowance, because if your pension inputs changed, you may end up with more or less annual allowance to roll forward into 22-23 from the rollback period, which then if you're impacted in 22-23 in any way, then that will be an out of scope year. But probably more importantly to the members on the call at the moment is you are entitled to claim back some professional services costs that have been incurred. Now, rather bizarrely, the guidance is very specific around IFAs being able to provide support around the choice, which is quite correct. IFAs are the only ones that can provide that information, because I, myself as a chartered accountant, I can do all your tax calculations, but I can't give specific pensions advice. So you do need an IFA to help you decide whether or not you want to have benefits in the 9508 scheme or benefits from the 2015 scheme. And you can claim up to £500 for the use of an IFA around that decision. The next element of advisor you can use is the where you've had to use, and it says an accountant, but to be honest, a skilled colleague such as my esteemed colleague here, Ben, he too can work out what your annual allowance impact is. So although it makes reference purely to accountants, it really is talking about professional advisors who help you. If you're only doing the triage at the beginning, you can claim up to £250. If you have to do the whole calculator because of the complexities, then you can claim up to £1,000. Now that includes VAT. All those figures include VAT. But I say I'm not aware of any other public sector pension scheme that is offering any compensation. So as I say, it is the NHS have actually come up trumps with this one, albeit it's sort of the government's fault that you're in this position anyway at the moment. So there is, just to make people aware what you need to do, there is a form, the Public Sector Pensions Remedy Cost Claim Application Form. This has 6 sections that must be completed. And if we will do the work for clients, then we will be quite specific on our invoices, how we've assisted. And then obviously that invoice then needs to be provided as evidence of payment, along with details of the service that you've required. And you really need to be quite explicit. If you're a bit vague and say, oh, I've needed help on my pension reform, that won't wash. You have to be actually, due to the complexities, I've had to seek a professional advisor to help populate, whether it's the triage or the whole calculator. to arrive at and obviously there's been a cost associated with that, and you're seeking to claim whether it's the actual cost or up to the maximum of £1,000. That is the link, which if we can send them electronically, it might be a live link to the fact sheet, and that's about 5 pages and just gives you an overview of what you can claim for, how you can claim for it. I have to say, for the direct tax that you may suffer, I think there's very, very few people who have a direct tax impact. It's predominantly going to be for claiming back professional advisors' fees. But where there are, I mean, there are about 12 different circumstances that it outlines, but you sort of have to have a law and legislation, understanding legislation. It's so complicated to follow, and so if you are impacted at all by that, I really would, you definitely need to seek assistance to actually ensure that you are captured within the rules, because that could potentially be for more than £1,000, and it's all to do with your available individual protections and the fixed protections that were in place during the last during the rollback periods, and whether or not you can whether you've lost them or whether you can actually reinstate them. A massively complex piece of legislation, so it's complex to understand it, let alone to apply it. So really, really do seek advice around that. But as I say, I would recommend you, if you go to the fact sheet, or even go onto NHS Business Services Authority, if you type in NHS Remedy Cost Claimback Scheme, it will take you to the scheme regulations, which are about a 10-page document. Because it's public funds, basically, they've had to be very, very thorough and specific about how these funds are going to be utilised, and how and on what occasion will actually be met and honoured. So just a bit about the process itself. As I say, it's been run by the Secretary for State for Health and Social Care. That has really been delegated then to NHS Business Services Authority. They're actually going to, they're going to appoint effectively loss adjusters who will be reviewing every claim, obviously with reviewing that claim against a cohort of measures that it needs to comply with in order for them to say yes, a refund of costs is allowable. And then there will be an appeals panel as well. So if at first you don't succeed and you feel you're being harshly done to, there will be an appeals panel that you can then approach to see if you can get that reimbursement. So yeah, that's really the NHS Remedy Cost Claimback Scheme.
Brilliant. So we're just going to sort of touch on next steps, really. So I think importantly, if you have received your RPSS, the statement, the brown envelope, have a quick look, see if you can spot the error that Morag mentioned. If you have had annual allowance tax charges, or you go through the triage and it says, look, you need to complete the full service, we do say seek professional assistance from a specialist accountant or financial advisor like myself, and make sure that you do complete and act. You simply burying your head in the sand won't do. And it's important that moving forward, I do personally think that HMRC are going to come a bit stricter when it comes to annual allowance tax. In the past sort of 5 years, I've not seen many cases of them really following it through or going after people with regard to it. So I would say it's important to act. There is a little reminder there, ignorance is not an excuse in the eyes of HMRC. So it's important, if you do have annual allowance tax charges, you have paid annual allowance tax through all those years, make sure that's correct. You could be paying for it for the rest of your life if your scheme pays it. So remember, you don't want to be paying excess tax for the rest of your life, and it's important to act now.
One final thing, actually. Obviously, in 1920, the government introduced for 1 year only the compensation scheme, whereby if you did have an annual allowance charge in that year, any clinical member, and then elected for scheme pays, the cost to the fund would be met by the government at the point of retirement. I believe that is effectively being reopened for this purpose. So you can, if you have got a charge in that year now as a consequence of the reform, then do elect for a scheme pays election, fill in an SBE2 form, and then that will then be covered by the compensation scheme that was in place for that year. And as I say, any cost to your scheme will be reimbursed at the point of retirement, so it'll cost you nothing.
One thing I'm going to highlight again in a moment is if you have got specific concerns, we're going to give you some details about contacting Armstrong Watson in just a minute. But just before I sign off, we've got a number of courses coming up. MDU members can access a range of learning resources to help deal with the demands of clinical practice. All the way through the year, we are adding new courses and webinars on. Here's just a couple. We've got managing conflict between doctors and patients. We've got setting up in private practice. We've got a webinar coming up next week or the week after, 22nd of January, on medical examiners. You can always head to the mdu.com/learn to find out what's available. Again, we've got a number of group seminars and e-learning, and often our medical legal seminars can be delivered virtually or in person at your hospital or group care GP practice. These are free to members and to non-members, and they provide a really valuable opportunity for reflection, for discussion. We are constantly expanding the suite of member-only learning resources. So if you want more information, you want to see a full list of the seminars and the e-learning modules, again, visit our website. As I mentioned earlier, MDU members get exclusive rates on Armstrong Watson's tax accountancy and business advisory service. If you've got an inquiry that specialist medical accountants already support you, and as Ben and Morag mentioned, you can book a free 20-minute consultation using the QR code that you can see there on screen. Or if you're old school, you can email healthcare@armstrongwatson.co.uk. You'll need to quote your MDU number to access the service, which kind of brings me towards the end. So if you're not an MDU member, you can find out a little bit more by scanning the code that's on screen. Just a reminder, if you fill in the short feedback survey, you can see on the console, we'll send you an attendance certificate. If you're not an MDU member and you'd like to find out more about the benefits of membership and how we can support you, go to the mdu.com or scan the QR code on screen. But it really just leaves me to say, Morag, Ben, thank you. I think you've shed some light on an often murky subject. So thank you very, very much for joining us today and talking us through the challenges.
Our pleasure.
Pleasure.
Thank you, everyone, for joining us.